In recent weeks, the financial world has been abuzz with excitement following a groundbreaking announcement by the U.S. Securities and Exchange Commission (SEC), the approval of 11 Bitcoin exchange-traded funds (ETFs), marks a significant milestone in the journey of cryptocurrency from a niche investment to a mainstream financial asset. This development has sparked a surge in Bitcoin's value, propelling it towards the all-time high it previously set a few years ago. Let's delve deeper into why this is such a monumental shift and what it means for investors and the broader financial landscape. The new area of Bitcoin investment, mainstream acceptance and increased confidence. The introduction of Bitcoin ETFs is a watershed moment that signifies the cryptocurrency's acceptance into the financial mainstream. For years, Bitcoin was viewed with skepticism by traditional investors, seen as a volatile and unregulated asset. However, the SEC's endorsement has changed the narrative, offering investors a secure and regulated way to invest in Bitcoin. These ETFs provide daily liquidity, making Bitcoin more accessible than ever before. This development not only boosts investor confidence, but also paves the way for new clients to consider adding Bitcoin to their investment portfolios. Diversification and risk management. In today's uncertain geopolitical climate, investors are increasingly seeking alternative assets to hedge against potential downturns in equity markets. Bitcoin, with its low correlation to traditional assets like equities and bonds, presents a compelling option. The availability of Bitcoin through ETFs offers a prudent way to diversify investment portfolios, similar to how investors have historically turned to gold, hedge funds, and commodities for portfolio protection. This broader acceptance could lead to significant interest from institutional investors, such as fund managers, insurance companies, pension funds, and banks. The halving event, a catalyst for growth. Looking ahead, Bitcoin is on the cusp of a halving event in April 2024. Historically, these events have often signaled the beginning of a significant price increase, as they lead to a reduction in the rate at which new Bitcoins are generated. With Bitcoin now recognized as a regulated asset, the upcoming halving could attract even more investors, potentially leading to substantial gains. Why ETFs are a game changer. Simplifying Bitcoin investment. Before the advent of Bitcoin ETFs, investing in cryptocurrency was a daunting task for many. It often required navigating the complexities of crypto wallets, which posed security risks and were susceptible to hacking. The perception of Bitcoin as a risky asset associated with illicit activities further deterred mainstream investors. However, with the SEC's approval of Bitcoin ETFs, investing in Bitcoin has become as straightforward as buying shares through traditional investment platforms. This simplicity opens up Bitcoin investment to a wider audience, including those who prioritize security and regulatory compliance, addressing concerns and looking to the future. While the new ETFs offer a more secure and accessible route to Bitcoin investment, it's important to acknowledge that challenges remain. Cryptocurrency still carries risks, including market volatility and regulatory uncertainties. Moreover, the potential for governments to introduce their own digital currencies could impact the landscape of cryptocurrency investment. Nevertheless, the shift towards regulated investment options like ETFs is a positive step toward mitigating these concerns and enhancing investor protection. How to invest in a Bitcoin ETF. Investing in a Bitcoin ETF is straightforward and can be done through most investment platforms and accounts available in the major markets of the US. This accessibility ensures that investors can easily incorporate Bitcoin into their portfolios, diversifying their investments and potentially enhancing returns. While some companies may initially resist offering access to these ETFs, investor demand is likely to drive widespread adoption across the financial industry. In summary, the SEC's approval of Bitcoin ETFs is undeniably a game changer in the world of finance. This move not only legitimizes Bitcoin as a viable investment option, but also opens the doors for more cryptocurrencies to be recognized in the form of ETFs. As we stand on the brink of this new era, the potential for Bitcoin and other digital currencies to reshape the investment landscape is immense. While the inherent risks associated with cryptocurrency investment remain, the introduction of regulated, liquid, and accessible ETFs is a monumental step forward. For investors willing to navigate the volatility, the early adoption of Bitcoin ETFs could offer unprecedented opportunities for growth and diversification in their investment portfolios.